What's up, Victory Tribe? So this is a video going over the fib. These are the key levels, again, just to reiterate, based on the previous video I posted, just kind of like a warm-up, informational video about the fib before I actually show you the fib and how I use it. So if you want to screenshot this, go ahead. And we're going to go ahead and go to our chart. Right now we're on the daily. And I'm going to click the drawing tool, scroll up if you haven't already favored it. Excuse me. And it says fib retracement. So, again, when it is bullish, as you can tell, we are at an uptrend. You want to go from the swing low to the swing high. Like that. Okay? And again, it's called Fibonacci. I use the fib tool to measure pullbacks / corrections. So a correction in all actuality is a pullback. It's basically the market collecting the funds before it goes the direction that it wants to go, the trend that it wants to go. So as you can see on the fib tool, at these key levels, it has prices. So it's basically saying at this price, we could pull back. At this price, we could pull back. At this price, we could pull back. So what I'm going to do, I'm going to draw a line here. I'm going to make this line pink, of course. And that's basically me marking the pullback zone of that area, right? Then I'm going to draw it at the 50%. I'm just doing this so you all can see. I'm going to do 38.2%. Boom. And then this will be my 50%. So again, I don't use this to enter. I use this to measure. And when I say measure, I'm basically seeing how is price going to react to these levels. Is it going to break this level and go further down? Is it going to break this level and go further down? Or is it going to bounce off of this level and continue up, going up? So if we play the market, as you can see, the market came down to the 38.2%. And as you can see, the market is consolidated in this area, right? Even if you go down to the 4-hour, okay? What is it doing? It is consolidated in this area, right? And along with this, you can use these areas as indicators, as an indication. Because you can see it better, right? And let me clone this. Why are these indications? Because that's letting us know that if price ever broke these levels, then it's going to go the direction it wants to go. So if it indicates that it wants to go further down, it could go further down here, or it can go further down and hit one of our other levels, right? Because again, on our notes, it says that these are our key levels. So if it does break the 61.8%, which is a healthy pullback, then that means that it could go to a deep pullback, right? So right now, we are basically consolidating at the 38.2%. We played the market. And what did we do? We ended up breaking above the indication. If we go down to the 4-hour, we broke above the indication, okay? Now, a lot of people like to wait for the pullback or the retest of the indication because it kind of solidifies like, hey, this is where we at. We're not going no lower than this. So as you can see, the market broke out. It broke the indication. It actually came back down and retested. Like you could have entered at the break or you could wait for the retest, okay? So if we play the market, it never broke below, okay? So again, if you were to enter, you could enter at this candle and put your stop loss down here, okay? You will enter at this candle, which is the break of the indication, the full candle, and you will put your stop loss down here, okay? Because as you can see, price never came back down to retest that 38.2%. It continued to go up, okay? It continued to go up. And your TP, your first TP, will be the previous high that was made, right? So this is how I use the Fibonacci tool. Okay, as you can see, price never came back down to the 38.2% or the indication. Yeah, it kind of straddled up and down, but what did it do? It ended up coming up and testing this high. Okay, it came up and tested this high, came back down, gave an indication that it wanted to go higher. Let's go to the 1 hour. Gave an indication that it wanted to go higher. So what do? You're going to draw your indication line. And I do the same thing. The way to have a successful process is to do the same thing every single day. Every single time you take a trade. Boom. You wait for the break, and then you enter. Now, we just broke our indication, right? We just broke it. So, we are now at a new high. You're going to get your fib. We're going to play the market out. Boom. Right? Now, this is where we are right now in the market. Because if you would have got your fib and measured, I'm trying to grab this thing, y'all. I'm going to swing low to swing high, right? Swing low to swing high. This is where we are, okay? Now, the only thing about the fib, this is why market structure is key, okay? Because if you don't know how to identify a swing low or a swing high, then you cannot use this tool. You can't use it, okay? You can't. Because if you draw your fib wrong, your measurements are going to be wrong and you're going to think that the fib don't work. But it's you. You don't know how to point it out. That's why I say practice, 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 okay? Anyway, so I'm going to go ahead and draw my line. So this line is going to be our 61.8% of our pullback. And down here is going to be our extreme pullback, which is going to be the 78.6%. Okay? I'm going to take this fib off. I like clean screens, y'all, if you haven't noticed. And I'm going to delete this indication line. Oh, hold on. That wasn't the indication line. Let me go back. And then I'm going to redraw this 78.6%. Now, again, we are drawing these levels to see how price reacts. So you see, price came down, it broke our 50%, and now it's at the 61.8%, right? Okay, so now we want to see how price react at these levels. And this is where we are today. So a lot of people get confused when it comes to ICC because they say, hey, some people are saying that it's bullish and then some people are saying that it's bearish. What it is that on the daily, what do you see? We are clearly at an uptrend. We are at a low. We made a high. We made a higher low. We made a higher high. We made a higher low. We made a higher high. This right here is a higher low. So this is the daily low, okay? We almost touching it. Now you see that we wicked and touched the 78.6%, but we don't have a body closing below. And a lot of people ask me, hey, do you measure it with the wick? Why you don't use the wick? I just don't use it. I don't measure the wick because a wick is like saying, we could have went there, but we didn't, So it's up to you if you want to use the wick, but I find in my experience that using the body kind of solidifies the move even as a stronger move when it comes to the market. But that's just me. If you want to use the wick, use the wick. I always encourage you all to try and do what's best for you. Whatever works for you is for you. I'm just here to give you guidance, and then you trade whatever way fits you. Okay. So let's look into this. Okay. Because this is where we are right now with gold. Okay. With gold. So this purple line right here, again, this was a previous resistance level that gold made earlier in the market when it came up to this high and it couldn't break, and then it finally broke up and created a new high. So I just marked that level, okay, because that could be a level of resistance when we try to go back up. But as you can see, it's not really a strong level because we broke past that level twice. So I'm going to delete that so you won't get confused. Okay. Now we are here in the market, right? We are here. As you can see, I'm going to change the color of this line so you can understand. This is the indication that we want to go up. Okay. This is the indication that we want to go down. That's why I say a lot of people get confused, but the market could indicate two directions. All you have to do is wait to see what it's going to do. Like today, I did not take a trade. I didn't take a trade. A lot of people enter at the break right here because the market, why is it doing that? A lot of people entered right here because, of course, if it broke this line, that means we are selling. We came back up. We broke below this line. We were selling. So, yeah, it is a strong area. As you can see here, the same 61.8%. Every time we got below this line, we were selling. Okay. So, yeah, it is a strong area of interest. But we also indicated that we wanted to go down. Okay. We indicated that if we go to the 1 hour, we indicated that we wanted to go down. Okay. So on the 4 hour, this is our indication, but I will wait until we break below this and come down and break below the daily low. I would not enter to sell unless we break a daily low and we are full-blown bearish. Full-blown bearish. Okay. But again, we came down to this level and the market didn't even want to come down. So all of this right here, this is just, I think the market is just collecting money for its next big move. Okay. So when you're looking at the market, you want to look at all time frames and you want to look at market structure. What is the market telling you? The market is telling you a story. Hey, I might go down. I don't know when, but I'm going to go down. I don't know when. I'll let you know. Hey, I want to go up. I showed you I want to go up. I don't know when, but I want to go up. Hey, I don't want to go no lower than this. You see, the market came, it tapped the indication that was made on the 4 hour, but did not break. Okay? So stop jumping in these trades and actually study market structure. This is all market structure price action. It's leaving footprints on where it wants to go. All you have to do is wait. Just because you see somebody on TikTok entering the trade does not mean to enter the trade. Stop copying folks. Take the best trade. You don't need to trade every day, okay? I hope this helps. Ashe.